Good afternoon, investors and corporate. Welcome to Digital Roadshow third quarter 2024 performance review. This section will run about 45 minutes, including Q&A. Company will start the section by 30-minute presentation, followed by 15-minute Q&A. And during Q&A, investors may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite PTT Global Chemical Public Company Limited to start the presentation.
Thank you. So before we start, can we check the investor on the call? Understand there's only one investor, right, from Xspring. Okay, so maybe we start first. Right now, we only see from Kun Chachapon from Xspring. So maybe understand there may be more investor joining. So maybe first we start in English, but if not, maybe we can switch to Thai as well if you prefer. So firstly, starting on the strategic execution. So for this quarter, we just like to report on the progress as we continue to execute on the strategy that we have set, which is based on the 5 pillars and 1 transformation enablers. This is the strategy that we announced since the second quarter. And this is aimed for us in order to be able to go through the current challenging environment in the petrochemical cycle, as you may be aware. So that's why we laid out it into these 5 pillars. So we go through each of one by one, starting first on the portfolio transformation, which in this quarter has been significantly progressed. But before going into that, firstly, just like to reiterate on our competitiveness, especially on the olefin chain, which there has been key significant progress in the third quarter, which is we have been in progress in terms of discussion with PTT on the revision of the ethane feedstock agreement that we have with them. And we reached quite notable progress in terms of agreeing with them that there will be increase in the ethane cost of around 3%. This is mainly to reflect the increase in the natural gas cost of PTT because of the single pool gas pricing policy that's been implemented by the government during this year. So the impact of this to the financial statement for this year is that there will be the net impact of approximately 200 million baht. So this is, of course, a retroactive adjustment from the beginning of 2024 and for the full year, which will be taking the increase of ethane cost by 3%. But offset with that is that we will have additional volume of ethane available from PTT as well, starting from the fourth quarter onward. So this negative 200 million impact is already reflective of this additional ethane volume that we'll get starting from the fourth quarter. And then in next year, we expect to get the full year increase in ethane, which we expect to see increase of 1.6 up to 1.9 million tons of ethane. So that is equivalent to around 20% of ethane increase for the 2025 full year. And why is this important to us? I think it's shown throughout the past that ethane is the most competitive type of feedstock for GC, and it's something that helps to differentiate GC from the other players, especially in the Southeast Asia region, which most of the other players are liquid-based olefin cracker. So you can see from the right-hand side of the chart that the ethane is able to command the more stable EBITDA margin, especially during these past 2 to 3 years during the high crude oil environment, which makes it more and more difficult for the naphtha-based player to maintain their profitability. Besides that, outside of using ethane as our feedstock, we have been enhancing our feedstock flexibility as well, so that helps us to have more flexibility. And on top of that, we are also exploring potential for global feedstock sourcing as well. So we look at outside of Thailand or for other potential sources to bring in feedstock that will help enhance our competitiveness. For the next one, going into the first pillar, which is the portfolio transformation, which I mentioned that there's been many significant milestones during the third quarter. I think the first thing is that this is the strategy that we laid out because we realized that there is many challenging in the industry at the moment, and we want to scan through our portfolio to see whether there are any challenge product or challenge company which may not be able to compete in the market in the long run. So we have identified two key companies, which are Vencorex and PTTGC. The first one is Vencorex, who is the producer of a product called HDI, and their main plant is based in France. And as we know that in Europe, it's quite challenged with the high feedstock costs and also the inability to compete with the Chinese player as well. So that's why on the 10th of September, Vencorex decided to file a petition to enter into the judicial reorganization process with the court in France. So this process has been ongoing since September, and we expect that the process should be complete by the end of this year. And from there on, afterwards, we'll look for potential buyers to come in and take over both the business in France as well as the subsidiary of Vencorex based in US and Thailand. So that progress is ongoing, and we expect to be able to clear this within the first quarter by the latest. And then afterwards, we'll see that we'll be able to discontinue the lost contribution from this company. The other company that we identify is PTTGC, which is the joint venture that we own 50% in the company with our Japanese partner. On the 15th of November, PTTGC approved to enter into the business withdrawal process. So this has been approved by both shareholders of the company. In the next page, you will see more details about PTTGC. As I mentioned, that is a 50-50 joint venture with our Japanese partner. And the company has been with us since 2017 when we acquired the company from PTT as part of the petrochemical asset injection from PTT, our parent company. For the first 5 years or so, you can see that it was able to generate positive EBITDA for us. And but things turned drastically from around 2022 onward, when there were a lot of new suppliers, especially from China, that came to the market. And most of these players are propylene-based producers, which have improving competitiveness compared to PTTGC. So that's why over the past year and a half or so, both PTT and the partner has been reviewing the long-term sustainability and the competitiveness of PTTGC. And after thorough review, we decided in the fourth, as I mentioned, on 15th of November, we decided to approve the business withdrawal of PTTGC. So this process will begin immediately, and during November and December will be the time that the company will terminate the existing business contracts with the counterparty. And then over the next 3 years, from 2025 until 2028, will be the deconstruction process that the company will do to clean up the site and remove all the plants and the equipment. So this process should be complete in 2028, and that will be the formal end of the business withdrawal process. So as you can see that the process is maybe a long-term process, but we will expect to book all the provision and the expense related to that in the fourth quarter, which will be around 3 billion Thai baht. So I think the key point from both of these companies that we try to book all the provision and all the related expense within this year, and then from 2025 onward, we will realize the benefit from the improvement to the financial statement in that there will no longer be the loss contribution from both of these companies. In the next page, the second pillar that we like to talk about is the pillar which we look at how to optimize our existing operation. So in the past, I think GC has been proactive in terms of many ongoing operating efficiency improvement programs. As you can see from the left-hand side, we have operational excellence program, digital transformation, as well as the business process improvement program as well. So all these things we have been implementing for quite a few years, maybe 5 years or more than that. And at this point, I think we like to take this initiative that we have and take it to the next level. And we will do that by this program that we call holistic optimization, which will look at 4 key elements, which are feedstock improvement, product improvement, technology, new technology like AI or machine learning, and also the overall efficiency and performance improvement as well. So from these 4 things, you can see that it's like an end-to-end process that we like to go in and look at across the board to see how we can improve the process. So from there, we expect that there will be additional on top improvement benefit of around $168 million per year. So this zoom in more into the product strength that we have, which you see that focus more on the olefin chain, and you can see that we have complete product portfolio from the olefin chain. Our main product in the past has been PE, right? Because we are ethane-based producer. But from next year onward, we will have additional volume of PVC, and this is coming through our JV company called ATC Vinythai, which we own around 33%. So ATC Vinythai will double up the PVC capacity in next year from 400,000 tons up to 850,000 tons after they complete the expansion program that they have this year. So you can see that with the expected resilient and the expected strong performance of the PVC market that we have seen, we expect that to continue into next year as well, and that should help to enhance the profit that we have. And besides that, we continue to look at how to enhance our product, as I mentioned before, our program on market-focused business, and also utilizing our partnership with our partner that we have in order to enhance the product within our portfolio. So LyondellBasell is one of our partners, and you can see that for PP, we are able to have quite a good contribution in terms of the specialty grade within our PP product portfolio as well. The next page will be focusing on our specialty chemical business, which is mainly through Alnex. You can see that we have supported Alnex in terms of the growth, especially if we're focusing on the high growth market like Asia Pacific. In the past, we have talked about Alnex expansion in China and in India. So the next path for them is to enhance on the position in Southeast Asia, because going forward, we still do believe that Southeast Asia will be one of the main markets in the future, especially with the growing geopolitical tension. Southeast Asia is becoming more attractive to the foreign investor. So that's why we are planning to support next in terms of the expansion of the Southeast Asian hub, which is based in Rayong, which this facility should be able to produce a wider range of product grade and also be able to focus on providing the technology to the key customer within the region. So this program is part of the the overall pathway of growth for our next, which you can see on the right-hand side that there is quite an ambitious target for our next to grow that EBITDA from the current level, which is roughly around 300 million euro per year, to grow it to around 600 million euro per year by 2030. And that will be done through, as I mentioned, capacity expansion, as well as operational excellence, cost improvement, process improvement. And the third engine is also on innovation and sustainability as well. So all these elements will help to help our next reach that target. The last aspect within our strategy is that we also want to focus on sustainability and also innovation as well. And I think this is a good example of how we execute on that pathway, which we just announced the collaboration that we have with one of our Japanese partner, which is the company called Toray, who is one of the leading producer of the nylon business. And they are collaborating with us in terms of utilizing one of our technology that we have in the capability of our innovation team. So we are doing the collaboration on the study of the product commercialization of the one product which is called bio-gluconic acid, and as well as the bioadipic acid. So I think the key benefit of this product is that it will be able to utilize the natural feedstock, which is sugar, and then be able to turn that into bio-nylon, which can be used in a wide range of product and application, mainly in the fiber, clothing, and also in auto as well. So this is a long-term project that we are studying and probably will be able to commercialize. The timeline that we have is in 2030, so that may be quite a long time away, but it kind of exemplify how we look at the long term and how we can improve the sustainability and innovation strategy of GC as well. So just to summarize, after going through our strategy, this is to summarize on the outlook that we have for our business next year. So on the left-hand side, you will see the summary of the price and spread outlook that we have for next year compared to this year. If you start from the refinery business, I think you can see that the spread, if you focus on the diesel spread, is mainly stable with this year, right? I think the diesel spread has now normalized after having been very strong over the past 2 years. So we can see now that it's normalized at around region of around $15 to $20 per barrel, which is still quite a good level for the diesel spread. And since our product is 60% focused in diesel, that's why we still expect refinery to have a moderate or quite a moderate good performance into next year. But more importantly, will be on the petrochemical side of the business, which if we look at both the aromatic chain and the olefin chain, we do expect there will be some improvement next year as well, but only at a slight to moderate pace. And that is in line with the expectation that we have that the market will continue to be challenged. The petrochemical industry will continue to be challenged with the overhang of the oversupply that is still in the market. Whereas the demand growth is still on a more slower pace of recovery. So that's why we still being cautious, and we expect that the growth next year will be moderate growth. And if you look more closely at GC ourselves for next year, overall, one key factor is on the feedstock mix, which we already talked about on the olefin, that we expect will have more ethane volume available to us next year. So you can see that we'll have expect to have ethane volume at around 1.8 to 1.9 million ton, which is around 20% increase from the current year. So that should help our olefin business to have higher utilization rate. As you can see on the right-hand side, the utilization rate of olefin increased up to around 91%, which is a 10% increase from the current year, which is at around 80%. And besides that, we also expect next to have volume growth of around 7% as well. This is benefiting from the expected improvement in demand in all the key regions. And the other point, I think, as I mentioned before, on the portfolio transformation, that we also will have uplift from the discontinuation of the loss contribution from Vencorex and PTT as well. And on top of that, we expect that Vencorex will be able to conclude the process for the sales of their asset in the US and in Thailand. So there will be some potential upside gain to come if those sales process is complete next year as well. On the bottom right, this is just to conclude the project that we'll have starting up next year. Nature Work Plan 2, this is the PLA bioplastic JV. That one is a new expansion plan that is based in Thailand. Is still on progress to start operation in the third quarter. PVC expansion under ATC Vinythai, this one we talk about. And lastly, biorefinery, which is a modification to our refinery, which means that going forward, it will be able to produce sustainable aviation fuel. That one we expect to start operation in the first quarter of next year as well. So next, I will turn to my colleague for the market outlook. Next.
All right, for the market outlook, as Khun Praveen mentioned that next year we expectation for the demand reflect quite a moderate pace to recover. But thanks to the IMF forecast that the overall demand would be around 3.2% next year. So that would help the economic growth on the demand side. In terms of the recovery, we see some gradual improvement in various factors, such as the declining inflation and the recovery in the manufacturing players, and also the interest rate cuts that help that support the economics in the overall market. So in the first slide, as you can see from this slide, we expected that the crude oil price would be at the range around 75 to 79 in next year. This would because thanks to the geopolitical tensions and the Fed rate cuts that would help balance the crude oil price at this level. From the for the bottom graph, you will see that this is the refinery crack spread. The main product of PTTGC is diesel. We expected that the diesel crack spread will be around $16 to $20 per barrel, which quite slightly go up from last year. This is because the interest rate cuts, and this is because the control of the supplies. And next please. For the aromatics chain, you can see that for the first chain is the paraxylene chain. For the PX chain, we expected that the overall of PX chain, the margin would go up for around in the level of $500 per ton. This would help supported by the overall demand that will be gradually growth compared to this year, and as well as the PTA and PET chain that remains improved in the fourth quarter. And the turnaround of the 2024 there are quite turnaround periods in the 2024. For the benzene chain, as this year the benzene price is quite abnormal because of the benzene manufacturers and the olefins manufacturers control their operating rates. That's why the benzene, which is the byproduct of the olefins, has a lot lesser than the normal level of this year. So we believe that in the next year they will absorb some balance to go back to the normal level. Next, please. For the olefins chains, as you can see from the graph, that the overall of PE crack spread in this year is quite low at around 330 to 360. We believe that this is quite the low margin because of the downturn of the economics and the demand that hasn't been improved yet. So thanks to the economic growth that we forecasted to be improved in next year, so that would ramp the PE spread up to the level nearly to 400 in next year. And for the PE supply, in terms of the supply, the PE supply, the new supply will a lot lesser than this year, at around only 4 million tons next year. Opposite to the PP side, in terms of the supply, PP supply will enter at around 6 million tons next year. They continue to have a lot supply adding from this year to the next year. So the new supply will pressure the market of PP continue to we see that it will continue to next year. And for the Allnex outlook, we have 4 key markets of end user of Allnex, as you can see from the graph. And they for the fourth quarter is quite a festive season for Allnex. So we believe that the overall volume of Allnex will be down compared to the third quarter of this year. But for the overall market segment, especially for the automotives, is quite flat. This is because of the demand has not improved yet. But we see some green flag here that we have the quite good demand in the industrial goods, especially from the industrial metal that made through the coating of the containers, which is affected by the Red Sea conflict. So this is quite a good demand during the Red Sea conflict for this sector. For the packaging, we believe that the consumer will consume the more product, followed by the growth of demand. And for the construction and decoration, we believe is quite flat among 3 regions. So the overall, as Marine mentioned, we believe that with Allnex initiatives, the growth of the volumes will be ramped up around 7% in each region. So that's all for the overall GC.
Thank you very much for joining today's call. And if any follow-up question, please feel free to contact us.
Okay, the section has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investors and corporate for joining the conference. We look forward to welcoming you all again in the next quarter. Thank you very much. ขอบคุณนะคะ